This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Disney dives. The Mouse House does something it hasn't done in 5 years, and investors don't like it.
Mystery rally why today's big market gains have some investors a little confused.
Trending topics, Facebook being accused of political bias, and now a top Republican senator wants answers. All that and more tonight on Nightly Business Report for Tuesday, May 10th.
Good evening, everyone. It was a happy Tuesday on Wall Street. The Dow rallied more than 200 points, but we begin with a late-day sell-off at the happiest place on earth. Disney, shares of Disney. For the first time in 5 years, the big blue-chip company missed earnings estimates. Revenue from this widely held stock also fell short of expectations, and this comes despite big blockbusters at the box office like The Force Awakens and Zootopia. Here are the numbers. Disney earned $1.36 a share. That was below the $1.40 that analysts expected. Revenue of $13 billion was higher than last year, but Wall Street was looking for even more. And that, along with lower ad sales in Disney's media business, weighed on shares. Julia Borston has more now on Disney's disappointing quarter.
Disney shares falling in after-hours trading on earnings that were short of Wall Street estimates for the first time in years. Still, adjusted earnings per share grew 11% on standout growth from the movie studio, growing its revenue 22% and its operating income 27% from the year-ago quarter on blockbusters The Star Force Awakens and the surprise hit Zootopia. Disney CEO Bob Iger kicking off the earnings call by talking about those hit films. But it seemed to be concerns about the media networks division, including ESPN. Its revenue was flat in the quarter. That weighed on Disney stock. Back over to you.
Thank you very much, Julia. Robert Luna joins us now to talk more about Disney's disappointing earnings, at least the street was disappointed with it, and the issues that are weighing on the company. He is CEO and Chief Investment Officer with SureVest Capital Management, and Disney is one of his top holdings. Welcome, Robert. Nice to have you here.
Thanks for having me.
The street seems to be disappointed in Disney, but does the street have it right? You seem to think the fundamentals are pretty strong.
Well, I mean, to the point that Disney's a company that just doesn't miss, right? I mean, they pretty much do what they have to do quarter over quarter to meet earnings. So seeing them slip 5% in after hours really isn't that surprising. But I think this is truly a gift for long-term investors out there because it's really more focused on what happened in the last quarter than what we're currently seeing in this quarter. When you look at films like Captain America, The Jungle Book, both of those only a few weeks old have already grossed global box office over $700 million. Shanghai's opening next month, so if you're looking out to next quarter, I think that's one of the quarters where expectations are way too low and you could see a blockbuster beat. So picking this stock up around $100 a share, I think could be a great opportunity for long-term investors.
So in this case, were the expectations just too high, or was there something that you see in this report where the business didn't perform as well as it might have?
Yeah, Tyler, it's a great question. I mean, one of the things that surprised me, quite honestly, was the write-off of the Infinity Games division. That's their online video gaming division that they decided just wasn't working, and they pulled the plug on that. So there was $147 million there. There was also some foreign currency headwinds that came into play. And, you know, quite honestly, we're still as low as the numbers we're taking on the media division with what's going down with the slimming bundles, people pulling the plug on cable networks with ESPN. Those numbers did come in slightly worse than we expected also. So there are a few things in there that make sense why the stock's down. But like I said, looking out to the next quarter, there's a lot of things I think that will give some upside to Disney.
And, you know, we've heard this from Apple, but you say it's also true for Disney that India provides a great opportunity for expansion of its products.
That's true. It's very true, Sue, because there's only over 1.3 billion people right now in India that really haven't been exposed to Disney. And quite honestly, they haven't done a great job of making inroads there. But with the latest Jungle Book film, that's actually the biggest blockbuster ever from Hollywood. They grossed over $25 million in just the first weekend. So with the inroads that you're seeing them make and grow in China right now is now starting to get into India. So I think that's a whole other culture that's going to be exposed to Disney and a great growth opportunity for that company long term.
All right, Robert, we'll leave it there. Thank you. Robert Luna with SureVest Capital Management.
On Wall Street, all of the major indexes rose more than 1%, helped by weakness in the yen and a gain in oil prices. By the closing bell, the Dow Jones Industrial Average was up 222 points to 17,928, best day since March. NASDAQ added 59 and the S&P 500 was up 25. But today's sharp rise is leaving some investors scratching their heads. Dominic Chu explains why.
A lot of traders down here at the New York Stock Exchange were hard-pressed to come up with an answer for why we got the rally we did. Now, some say it was oil. That was a big part of the story. Others point to perhaps a slightly better than expected earnings season now that things are starting to settle down a bit. And while the rally was broader based, a handful of well-known and widely held stocks got a lot of attention because they hit record highs at one point in today's trade. Now, first up, you've got Mickey D's, McDonald's. It continues to rise and keeps heading higher despite concerns that some have about future sales growth. Also, consumer and healthcare products giant Johnson & Johnson also hitting a record high today. And then there's Home Depot. That spring gardening and home improvement season has given some investors optimism about the stock, perhaps. Now, in addition to all being at record high levels, each of these stocks is also a member of the Dow Industrials, and each of these stocks carries a dividend yield above 2%, or above the yield that 10-year Treasury notes will give you. So that may be a big part of the investing story. For Nightly Business Report, I'm Dominic Chu at the New York Stock Exchange.
The number of job openings hit an 8-month high in March and were just shy of their all-time high. The Labor Department says there were around 5.75 million openings, but the high number is also a sign that business owners can't find skilled workers qualified to fill the jobs they have.
President Obama's record on jobs is the subject of bitter debate from both sides of the political aisle. Yes, a lot of jobs have been created during the past 8 years, but is the labor market now considered healthy? As Steve Leisman explains, it depends on whom you ask.
Polls and the experts agree. The number one issue in the campaign?
Jobs.
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 Jobs. Jobs.
Jobs.
Yet even before the critical debate over what policies the next president should enact, both sides debate a more simple question. Has the job market recovered from the Great Recession? The Democrats, not surprisingly, say yes, it's mostly back.
I think you have to go back and look at where things were in 2008, 2009. We were losing 700,000 jobs a month at that time. The economy is now, for 6 years straight, added private sector jobs, almost 15 million jobs added in that time period. The unemployment rate fell from 10% down to 5%. We are seeing wages grow a little over 3% so far this year.
Republicans respond, there's more work to do in the job of putting Americans back to work. Stanford economics professor Ed Lazier, CEA chairman under President Bush, looks at the percentage of the population that's working and sees that it's fallen to just 60%, about where it was in 1985. A record 94 million Americans aren't part of the labor force. Lazier acknowledges a chunk of that is from baby boomers who have retired, but he's troubled by the many prime working-age Americans from 25 to 54 years old who aren't working.
If anything, you would expect that the demographic effect would actually drive the employment rate up for that group, not down, because when the older guys leave the market, there's more demand for the middle-aged guys. We're simply not back. We are not recovered, and we still have a ways to go.
Republicans even take issue with the marquee data point from the Democrats, that there have been millions of jobs created under Obama. They say the jobs created were low-quality, service jobs and low-paying. The reality? Millions of Americans have found work. The unemployment rate is really down from its double-digit peak from the Great Recession. But the recovery has been slow, and many Americans have dropped out of the workforce, and millions can only find part-time work. Can America do better? Are there policies that can bring about a real turnaround in the jobs market? Perhaps we'll get answers to those questions in a real, substantive presidential debate this summer and fall. You can hope, can't you? For Nightly Business Report, I'm Steve Leisman.
And to read more about the job market and whether it has truly recovered or how much it has, head to our website, nbr.com.
With the job market on the minds of voters, Bernie Sanders is hoping to notch out a win today in West Virginia's primary, a state hard hit by coal's decline. On the Republican side, for the first time, there's only one candidate. But that doesn't mean there's consensus. John Harwood is covering it all for us in Washington. Good to see you as always, John. Coal's a very big industry in West Virginia, and Ms. Clinton has been criticized for her comments in March about putting coal miners and companies out of business. She has since said that she misspoke, but how much damage was done by those earlier comments?
Significant damage. Look, she said we're going to put a lot of coal miners out of business. I think what she meant was, as she subsequently explained, that This was happening because of trends in the economy, trends in environmental policy. But nevertheless, that was heard across West Virginia and across other coal-sensitive communities in places like Pennsylvania and Virginia. So that is something that she needed to dig out of. The question is, can she dig out of it enough to win West Virginia? The polls going into Election Day today indicated she wasn't going to be able to. Of course, Bernie Sanders has got a problem because he has extreme difficulty catching her in delegates.
All right, let's talk over on the GOP side. What did House Speaker Paul Ryan say today about unifying the somewhat fractured Republican Party?
He said, Tyler, that he wants to bring it together, but he acknowledged that it would take something more than a week. You know, they just reached the presumptive nominee status for Donald Trump last week. Paul Ryan then subsequently came out and said he wasn't ready to support him. They're going to meet on Thursday, but he lowered expectations for this meeting, saying this process of unifying after a bitter, divisive primary is going to take some time, and I think they're going to be discussing various issues as well as some of the logistics of how the presidential campaign with Donald Trump in the lead will relate to the House and Senate campaigns, which are very important to Republicans.
On that note, John Harwood, as always. John, thank you so much.
All right, still ahead, expectations are low for this week's retail earnings, but there are some standout stocks in the sector that may be worth your money.
Online lenders require more oversight. That's the conclusion of a report from the Treasury Department, which comes just one day after Lending Club, the biggest online lender, pushed out its CEO for faulty loans, as we reported on last night. There are growing concerns about the quality of loans issued by this rapidly growing industry. The report also said the business remains untested through a complete credit cycle, and it's unclear how it might handle rising interest rates and tighter credit.
A top Senate Republican is pressing Facebook to explain how it picks its trending topics. This comes after a Gizmodo report that conservative articles are routinely suppressed. Facebook has denied those allegations. Eamon Javers has been following the story from Washington for us. What are some of the specifics here, Eamon?
Yeah, hi, Tyler. That Gizmodo report was quoting a single anonymous source who was a person who said that he or she had been an employee at Facebook and had worked on those trending topics, and said that routinely trending topics dealing with conservative news or from conservative news sites were suppressed in that algorithm that Facebook puts in there, and also said that Facebook employees actually inject stories into that algorithm so that they appear on users' news feeds, even though they're not actually trending according to the algorithm. So they said there's a human element here, and that human element is subject to some bias.
Facebook, what have they said about this?
Well, Facebook put out a statement today. They've put out a couple of statements on this. Today, what they said was Facebook is deeply committed to being a platform for people and perspectives of all viewpoints. They also say they've got a review here that's ongoing. They're looking into the situation to find out if any employees at Facebook did anything that was biased or to sort of put their thumb on the scale of what all of us who use Facebook see in our news feeds.
What does the Senate want to know?
The Senate's got a letter in now to Facebook. They've got a lot of information that they want to know. This is the Senate Commerce Committee. It's Senator John Thune, and I've got some of the highlights here. They're looking for, in fact, the names of some of the people who were involved in selecting the trending topics. They want to know how Facebook news curators manipulated the content of trending topics, if they did. And they also wanted to know exactly what steps Facebook is taking to investigate all of this. So whenever a Senate committee sends you a sternly worded letter as a company, you're always worried about that, but Facebook says it will respond. It's gotten this letter, and it will respond in due course.
Eamon, thanks very much. Eamon Javers in Washington.
The free fall at lumber liquidators continues, and that's where we begin tonight's market focus. The hardwood flooring company's net loss quadrupled from a year ago as it posted a revenue decline for the fourth consecutive quarter at that. Sales have been hurt over the past year by heightened concerns over the safety of some of the company's laminate products, including a February report by the CDC saying some of the flooring carried higher cancer risks than previously thought. Shares fell by nearly 8% to $12.39. White Wave Foods, which makes plant-based beverage and food products, saw its shares surge today after that company posted solid revenue growth for the quarter. Profit also increased and came in above analysts' expectations. In addition, the company raised its earning forecast for the year. Shares rose 7% to $44.57. Lower sales of mobile network equipment and costs associated with a recent merger weighed on Nokia's results. The tech company also warned that market headwinds and weakening demand in China would cause full-year earnings to decline. Shares of Nokia fell more than 6% to $5.31.
Strong demand for Caribbean cruises helped drive profit 41% higher at Norwegian Cruise Line, and the results fell in line with estimates. The cruise operator also reported an increase in overall revenue, but that failed to meet street targets. The company issued weak profit guidance for the current quarter as it expects sluggish demand in its European market to continue. Shares down more than 4.5% to $46.89. Meantime, Allergan reported a better than expected quarterly number, thanks in part to strong sales in its branded drugs unit, which includes Botox and the eye drug Restasis. The company also plans to buy back up to $10 billion in shares. Shares were higher by 5% to $225 on the button. And shares of Gap hammered today after the retailer posted disappointing earnings after the bell yesterday. The company issued a profit warning as well. Gap has been hurt by weak demand at its Banana Republic and Old Navy stores. Shares down 11.5% today at $19.30.
Well, department stores have seen better days. Traffic is down, so is revenue and growth. And this week, with a number of earnings reports due, we may learn just how big that sector's obstacles are. Courtney Reagan reports.
It's not as if the last several quarters have been great for previous standouts like Macy's and Nordstrom, but many retail watchers suspect something further has been happening recently, and it doesn't bode well for department stores' results this week. There's a lot of chatter that starting around March, traffic began to slow. Retailers started slashing prices, but still, clearance merchandise built up. Weather wasn't great in some places. Easter was early. Gas prices increased 50 cents per gallon since mid-February, and Amazon recently launched its own private label clothing lines. RBC analyst Brian Tunick notes department stores have spent more than $4.5 billion in the last several years investing in their own online shopping initiatives, but the return on that investment is uncertain, if not unfavorable so far. There are other worrisome signals. L Brands is one of the few retailers left releasing monthly sales, and April was a rare and wide miss. Knowing that the parent of stronghold Victoria's Secret and Bath & Body Works is faltering adds to mounting concern ahead of Macy's, Kohl's, Nordstrom, and JCPenney's reports. JCPenney doesn't report until Friday, but tried to give investors some comfort today, saying it's, quote, pleased with its first quarter performance, which is so far exceeding expectations. This in response to a report last week suggesting the retailer was instituting wide cost cuts, which caused shares to tumble. Macy's, once a favorite retail pick for investors, is the first of the department stores to report, and it's not expected to be good.
I think the department stores have a tough week ahead. I think Macy's on Wednesday will kick off with a really tough top-line print. We are modeling a negative 6% same-store sales, which would be among the worst prints that Macy's would put up, really since the financial crisis.
Boss isn't the only analyst warning investors. Analysts at Citi, Stern Agee, and MKM Partners have lowered estimates for Macy's, Kohl's, Nordstrom, and JCPenney, in many cases for both the first quarter and beyond. For Nightly Business Report, I'm Courtney Reagan.
Our next guest has names of department, discount, off-price, and online retailers that she says will be the winners in this new and challenging retail landscape over the next decade. She's Jessica Bourne, senior retail analyst at Merchant Forecast. Jessica, welcome. We gave you an assignment today. We're talking about all this carnage in retail. The department stores are dying, the retailers are dying, and we asked you to come up with your picks in those four categories: department stores, off-price, discounters, and online. Let's start with your department store choice. Who is it?
Great. I would like to nominate Nordstrom as my pick. If you look at Nordstrom compared to their peers, Nordstrom is not overstored. And what I mean by that is if you compare them to a JCPenney or a Macy's that have a really significant store base, many times in malls that aren't performing up to their recent highs of the last 5 to 10 years, Nordstrom has a very much smaller store base. And I think that helps them mitigate some of the risk of the slowdown in traffic in the malls. Number two, they have an off-price concept called Nordstrom Rack, and that has been a big driver of comps for them over the last few years. And that allows them to have an outlet structure in a sense and send some of their underperforming items to those doors. They also bought an online flash sale site called Hotlook. So they're definitely hitting their customer in all different areas, in the mall, off mall, online. And I think that's really been their approach from the get-go compared to some of their peers.
You also like TJ Maxx because you say they're doing multiple concepts like Marshalls and like Home Goods. That's not necessarily a discounter, but it is more off price.
Yeah, TJ Maxx has purchasing power. They have an international presence in Canada and the UK. They have their domestic presence with Home, Marshalls, and TJ Maxx. And I think they're able to snatch up some of those advantageous goods probably quicker than some of their peers in the off-price channel because they have the purchasing power, they have the doors they can flow all that merchandise into.
My wife can spend a lot of time and money at Home Goods. Let me just tell you, Jessica. But all right, let's move on to your third choice, or not necessarily third, your discounter choice, and that's Target. Why?
That's true. Target's taken a different approach. They are going after fashion. And if you compare them to a Walmart, Walmart stands for a bit more of a basic and commodity fashion selection. And Target is really partnering with fashion bloggers. They're bringing in really avant-garde merchandise that gets people in the stores that normally wouldn't shop there. And I think what's important is they're diversifying within their stores. They're bringing in grocery, which sets them apart from some of their peers. They also are paying attention to categories that matter to the shopper. For example, plus-size shopping, and a lot of retailers have abandoned their plus-size program, so that's a positive for them.
Amazon, you say, is bulletproof. It's taking over the world.
I think Jeff Bezos would like to take over the world. I think what's interesting to see from them is they keep adding additional product and category extensions, and we've seen them go into grocery. We've seen them go into fashion. They're actually reversing course, and now they're going to open brick and mortar stores, and they've started with bookstores. And so, they're innovative in the ways they get goods to the customer. You don't have to leave your home. They're taking market share from some of those big box retailers like a Costco, a Sam's, and a BJ's, and so I think they're unstoppable.
How ironic is that they would open a bookstore, a brick and mortar? But
they're going back to their core category.
Well, Jessica, we'll see you in a decade to see how these picks worked out.
Good,
okay?
I hope so.
All right, Jessica Bourne with Merchant Forecast.
Coming up, A-listers head to Wall Street to make trades, all for a good cause.
The world's top hedge fund managers, don't cry for them, Argentina or anywhere else, folks. They made more than $1 billion each last year. According to the rich list compiled by institutional investors Alpha magazine, the top 25 took home a combined $13 billion last year, and it wasn't even a good year for them. The highest paid were Citadel's Kenneth Griffin and Renaissance Technologies' James Simons. They both took home $1.7 billion. Ray Dalio of Bridgewater and Appaloosa's David Tepper each made $1.4 billion. And rounding out the top five was Millennium Management's Izzy Englander, who earned $1.2 billion.
And some of the biggest names in business, sports, and politics made their way to Wall Street today to give back. The A-listers worked the phones on the BTIG trading floor, traded stocks, and donated all of the day's commissions to charity. Bob Pisani was right in the middle of it all.
I say goodbye, baby, goodbye. Yeah! Nearly 100 sports and entertainment figures descended on Midtown Manhattan to support BTIG's annual Charity Day.
Representing the Odessa Chamberlain's Quality of Life Fund.
I'm here for the first time representing my own foundation that I'll be setting up called the Mark Messier Foundation.
It's all the brainchild of CEO Steve Starker, who sits every day in the middle of the trading room directing large blocks of stock trades.
We've donated over $35 million over the last 14 years. I think today may be our biggest day ever.
For a brief 2-hour period, many of the most famous sports celebrities in America Reggie Jackson and Bobby Valentine, as well as Miss Universe and Miss USA, and entrepreneur and Shark Tank star Mark Cuban rub elbows and do honorary trades on behalf of charities. This is not a one-time event. Most of these celebrities have established charities that they are actively supporting.
I'm indebted to the Boys and Girls Club, and for many reasons, that's why I'm in the big leagues today. And you know, ever since I've been in the big major leagues for 20 years, I've been giving back and hoping to give the same opportunity for these kids of today.
Even former New York Mayor Mike Bloomberg stopped by to work the crowd and to talk a little politics.
He has fooled everybody, or fooled isn't quite the right word, he's just surprised everybody. Trump has tied in to a feeling across this country that their future isn't as good as they had wanted it to be.
Wall Street may not have a favorable image on Main Street, but BTIG, which is donating its entire day's profit to charity, it's doing its best to change that. For Nightly Business Report, I'm Bob Pisani in Midtown Manhattan.
And finally tonight, an iconic American brand is making a change, a big one, at least for a few months. Budweiser is renaming its beer America for the summer and through the November election. With the Olympics also on tap, the company says it is making the change in honor of what may be the most American summer ever. About 1/3 of all U.S. beer sales occur between Memorial and Labor Day.
It'll be interesting to see how that goes. That does it for Nightly Business Report tonight. I'm Sue Herrera. Thanks for joining us.
And I'm Tyler Mathisen. Have a great evening, everybody. We'll see you tomorrow.